products.
That's right.
And in return, because if it is a trade agreement, there has to be give and take. In return, India is asking for reduction to zero duty for products of its interest.
That's right.
Which are labor-intensive products.
That's right.
Textiles, clothing, leather, gems and jewelry, and some agricultural products, which you have highlighted a few minutes ago.
That's right.
But the problem lies with the absence of the TPA, Trade Promotion Authority, for the US administration.
Right.
So India is prepared to work out an agreement which will say that, all right, India is providing market access in a host of products right away, but after the passage of a certain period of time, it can't be, indefinitely put off. But 6 months, 9 months, the US administration has to get its TPA and grant reciprocal tariff reductions on those products.
So
now,
in your experience, Ambassador Dasgupta, in your experience, what are the steps from here on? First up, are we expecting an interim trade deal in the next 7 days, best case scenario? And then towards the fall, we are looking at a bilateral investment treaty with the US?
It's too early to predict a thing like that. But I think because President Trump has set much store by having a trade agreement with India, and he's been giving press statements quite often, I think he would need to have something to save face, so to say, in the sense that he will need to put something on the table that this is what I have got from India already. And it provides very large market access opportunity to the US.
Right. Now, so it's definitely going to be a headline that Donald Trump will be looking for. But I think, Ambassador Dasgupta, there's also a headline that India would be looking for at this stage, wouldn't it?
Yes. So, there is a good chance that this 26% reciprocal tariff deadline of July 9th will get put off for another 60 days or 90 days, and negotiations will continue. Meanwhile, India has already, I think, purchased oil, and it has gone up by 270% in the past few months. So one of the major planks of President Trump's argument of an adverse balance of trade, that has been addressed in great measure already. And of course, the defense deals don't count in bilateral trade relations, but they also account for a substantial amount of money. And then, technology transfer and all other things. And the thing which President Trump does not mention is that by way of IPR royalty repatriation, by way of services, in the US adverse balance of trade is not actually adverse if you take all these other aspects of trade into consideration. Right. So I think overall we will perhaps see a kind of a mini deal in which the US will have market access in a host of products, close to zero. It will have to promise that it will provide reciprocal market access in items of India's choice within a certain period of time. And then I think this 26% reciprocal tariffs will get deferred and further negotiations will take place. In any case, the first tranche of the trade agreement is scheduled to take place only by about October.
That's right. Well, let's leave it at that this morning. Ambassador Dasgupta, pleasure having you as always, and thank you for your time this morning. Pleasure. Well, we can't really say at this moment whether it would be a photo finish or not, but it seems that negotiations are now down to the wire. Well, moving on now, but staying with trade relations, the foreign ministers of the Quad nations, India, the US, Australia and Japan held a crucial meeting in Washington on Tuesday, focusing on enhancing the strategic impact of the four-nation grouping in the face of evolving global challenges. Now, the discussion comes ahead of the annual Quad summit expected to be hosted by India later this year. India's external Affairs Minister S. Jaishankar joined US Secretary of State Marco Rubio, Australian Foreign Minister Penny Wong and Japanese Foreign Minister Takeshi Iwaya for the talks. Now, in a special media post, Jaishankar called the meeting very productive and said the discussion centered on making the Quad more focused and impactful on contemporary opportunities as well as challenges. The Indo-Pacific remained at the heart of the dialogue, with leaders reaffirming the Quad's commitment to a free, open and rules-based order in the region. Key areas of collaboration reviewed in the meeting included maritime domain awareness, logistical cooperation, education initiatives and stronger political coordination. As Jaishankar emphasized that recent months have seen major progress on many of these fronts. The External Affairs Minister also highlighted the importance of efficiency in the grouping's functioning, noting that a more cohesive, nimble and focused Quad will certainly help deliver better. Now, the upcoming summit, likely in the month of November, will aim to build on this progress as the four nations seek to collectively come together for a more secure and inclusive Indo-Pacific.
These are very important countries. These are very important strategic partners and allies of the United States. And together we have a lot of shared priorities, a lot of things we care about in the world. I think there are many global problems, but also problems that we face in our respective countries that can be solved by us cooperating together. And there are many topics that we can work on and focus on. One that I've personally been very focused on is diversifying the global supply chain of critical minerals, not just access to the raw material, but also access to the ability to process and refine it to usable material. It's critical for all technologies and for all industries across the board. And so having a diverse and reliable global supply chain of these is just one example of many that we can focus on and build upon and achieve some real progress on. So that's the hope for this partnership. That's why it's so important to host it here today.
This is a very important Quad meeting, as always, and unfortunately we meet against the backdrop of conflict and of escalating competition. So it has never been more important for us to harness our collective strength for peace, for stability, for prosperity in the Indo-Pacific and for all our peoples.
And moving on now, Defence Minister Rajnath Singh on Tuesday urged his US counterpart, Secretary of Defence Pete Hegseth, to expedite the delivery of the GE F404 engines needed to power India's Tejas light combat aircraft. In a phone call, Singh also pushed for early finalisation of the proposed joint production deal between HAL and GE Aerospace for the F414 engines, which would be manufactured in India. Now, the delay in engine supplies has impacted Hindustan Aeronautics' ability to meet its delivery timelines for the Tejas Mark 1A aircraft meant for the Indian Air Force. Singh and Hegseth also reviewed the broader India-US defence partnership, including joint training, military exchanges and industrial collaboration. Singh expressed appreciation for the US's continued support in India's fight against terrorism and welcomed deeper cooperation in areas like supply chain integration, logistics sharing and joint exercises. Both leaders agreed to build on the momentum of the critical and mutually beneficial partnership, with Hegseth inviting Singh for an in-person meeting in the United States. Well, time for a very short break right now, but coming up on the other side, will Sensex breach the 84,000 levels that it had touched on Monday? Well, that is what we will try and get an understanding. Avinash Rakshakar joins us on the show on the other side of the break.
तेरे लिए मंगाओ? मेरे नए म्यूजिक गॉगल्स मंगाओ क्या?
नई गाड़ी कप होल्डर है, ठोकी भी रख सकते हैं, म्यूजिक भी।
सेविंग्स की विद्या तो फिर तुझसे सीखे।
कुछ बड़ा बनाना है तो पहले बचाओ, फेडरल बैंक से रिश्ता बनाओ।
It's never easy to choose a new path, stand out in the crowd, to have your own new identity. The journey to self-reliance begins when you're fully prepared. Tata Motors Commercial Vehicles presents the new Ace Pro, now in bi-fuel, EV and petrol variants. So get ready to say it loud. Ace Pro, ab meri bari.
A staunch nationalist committed to ideology since birth. A BJP soldier dedicated to the country since his student days. A legal scholar who fights for justice. Heartiest congratulations to our beloved leader Sri N. Ramachandra Rao on his milestone as the BJP Telangana State President. Everyone are given a chance. This time, give power to BJP. Bharat Mata Ki Jai. Bharatiya Janata Party, Telangana State.
Welcome back. You're watching Morning Brief at 9. Let's bring you a mood check of the markets as they opened just a few minutes ago. Well, the big question that we were asking this morning was whether Sensex will breach the 84,000 levels. And well, it's kissing distances, if one can call it, away from that number. Markets at about 83,900 odd levels, just a little short of 100 points from those 84,000 levels that we had seen earlier. Meanwhile, the Nifty 50 is also up, almost touching the 25,600 levels in early trade this morning. News coming in from the mid cap and small cap space is a little more muted than the benchmark indices, but we're still seeing gains anyway. Meanwhile, volatility in the Indian markets, the India VIX, has also reduced by almost a percentage point in trade this morning, down to about 12.41 levels. Let's see where the action in the markets is coming from this morning. The IT sector seems to be the toast of the Dalal Street this morning. Let's pull up the Nifty 50 heat map and see what are the kind of gains that we are seeing. And of course, look at Infosys this morning, up by more than 2.25% in trade. We're also seeing healthy returns coming in for investors for TCS at about 1.4%, HCL Tech at about a percentage, Tech Mahindra, Wipro both in the territory of almost 1.5% gains or so. Meanwhile, mixed view coming in from the banking and the NBFC space. HDFC Bank is down about 0.6 of a percentage point, but ICICI Bank, reeling out of pain for the last 2 days, seems to have made some recovery. Meanwhile, the heavyweight Reliance Industries is down about 0.25 of a percentage point. Well, let's try and unpack all this. We have a very special guest joining us this morning, Avinash Gorakshakar. Thank you so much for taking the time and being here with us on News 9. Help us put what we are seeing on the screen in perspective. What's driving the upbeat momentum in the IT stocks this morning?
Yeah, good morning, Karthik. See, my sense is, I think, tailwinds in the US market seem to be improving, and I think clearly the markets are expecting that. Hopefully, I think the trade deal kind of suspense is now going to be over.
Okay.
Mr. Donald Trump has already said that beyond 9th of July, he's not going to extend the deadline. Specifically for Indian companies, Karthik, I think the good news is that very soon a US-India trade deal will be announced. And I think, sectors like IT, pharma, auto components, these are sectors which are going to be impacted.
But can we be sure of that just as yet? Well, while we know that negotiations have entered the 6th day, but we are still about a week to go, and we don't know how much ground US will concede if India doesn't concede ground on agriculture and dairy. So are we counting our chickens a little too soon?
No, I think it's very difficult to, visualize this event. But I would say that, the US will not like to be completely harsh on India. I think they look upon India as a very strong trading ally partner. And I think, net, I think in the overall scheme of things, US will not be so harsh on us. So I think, we've got to keep our fingers crossed, Karthik. But I think this definitely is an event which is awaited very long by the markets. I think hopefully it should be, a neutral or maybe a balancing kind of act from the US.
All right, a neutral or a balancing act. Well, we don't know how balanced it'll be for the steel sector and the aluminium sector, and that is again something which has come under the wrath of the US president, and tariffs globally have been imposed on these two sectors. But again, what we are seeing this morning on the steel sector, JSW Steel, Tata Steel, both up about 0.7 of a percentage point or more. So, Avinash, is there a guarantee sort of now kicking in for the sector that there won't be a real adverse impact of the tariffs that come in from a week from now?
No, I think if you see the metal stocks, they've come up from their record 52-week highs, and I think now valuations, on a very broad level, Karthik, don't look very expensive. My sense is that companies which are integrated like Hindalco, Tata Steel, JSW, Vedanta. Typically, companies which are large in size, which have got a very large domestic market. I think we are looking at tailwinds, from the Indian market. A lot of domestic demand is getting fueled by infrastructure kind of spending, both by the government and the private capex. So I think, markets are looking at some kind of positive trigger, in terms of price improvements in the global market. So I think net, we are structurally positive on some of the metal companies, especially the pipe manufacturing companies, where we believe valuations are not very expensive. And I think if earnings growth do come in much better than what the street expects, then I think you could see a good pump up in the stock prices of most of these companies. So I think, got to take a stock specific case here. But broadly, yes, I think unless metal prices improve sharply, hopefully once China starts buying in a big way, and of course the US trade, India trade deal, is also favorable. I think these could be partial other triggers which could actually drive valuations upward. So I think we'll have to wait and watch for at least the April to June quarter. But net, I think valuations seem to be attractive.
All right, valuations seem to be attractive, but wait and watch continues to be the mantra. Stay with me, Avinash, because interesting data coming in even from the auto sector, which I want to discuss with you. Mahindra & Mahindra has emerged as India's second largest passenger vehicle manufacturer for the third month in a row now, overtaking Hyundai and Tata Motors in the month of June. Now, the automaker, which exclusively sells SUVs, recorded domestic sales of over 47,300 units during the month of June, ahead of Hyundai's 44,000 odd units and Tata's a little over 37,000 units. Now, this continued streak shows Mahindra's rising dominance in the SUV space, boosted by strong demand for its rugged feature-packed models like the Thar, Scorpio, N Bolero and the XUV 700. Well, the company's expanding electric vehicle portfolio featuring the XUV 400 and models like the BE6 as well as the upcoming XEV 9e is also expected to play a key role in its future growth as per the company. Meanwhile, Hyundai's diverse lineup including popular ICE models like the i20, Verna, Creta and Alcazar as well as EVs like the Ioniq 5 and Creta Electric couldn't help it reclaim the second spot yet again in the month of June. Meanwhile, Tata Motors, which offers a broad mix of hatchbacks, SUVs and electric vehicles like the Nexon EV and Punch EV, continues to face stiff competition in the rapidly shifting PV market. Avinash, look at the chart on your screen now. We are looking at good results coming in, good numbers in fact showing up for automakers. Maruti Suzuki continues to reign as the leader on Indian roads, but Mahindra & Mahindra catching up and really defeating competition fairly well. Something that should reflect in its valuation over time?
No, exactly, Karthik. If you see Mahindra & Mahindra, they have been, increasing their market share in their traditional product categories like tractors. In the UV segment also, I think, this is one company which has managed the show very well. Strong volume growth plus good margin kind of stability maintained by the company over the last, say, 3 to 4 quarters. And I think, product innovation has been very aggressive for Mahindra & Mahindra. They've invested more than 1,000 odd crores for their electric venture. And I think in the electric vehicle business, the company has already stated that in the next 2 years, they aggressively want to grab up market share. So I think, M&M is a very strong candidate for re-rating. I would not be surprised that, from number 2, within the UV market, they're already number 1. But overall, in the overall sales number, they should be easily catching up now along with Maruti. My sense is that, of course, Maruti is also a very strong kind of leader in the passenger car segment. And I think good rural demand this year could possibly be a good kind of trigger point for the company. So I think net, I think, it's good that auto companies are now showing strong volume growth because there were some kind of doubts earlier because of the rare earth issue. But this seems to have eased out. I think we'll have to see individually how companies, battle out this kind of critical input, shortage from China. Right. But otherwise, I think broadly with a good monsoon, this year should be a good year for the overall automotive sector. Okay.
And any view on Tata Motors, the kind of cuts that we've seen in the stock price of Tata Motors over the last 1 year, still trading well below the 700 odd levels, 700 rupees per share. So any view on Tata Motors, is that going to be up for a re-rating as well in your opinion, Avinash?
See, I think my guess is that with a good monsoon, with good infrastructure spending by the government and private capex, commercial vehicle sales are bound to go up. And I think we could see that first in the first quarter after, Q1 numbers of FY26 are declared. But overall, I think the second and the third quarter are going to be very critical. Most importantly, I think one big trigger point for Tata Motors is the demerger development where the management has clarified that by December, the JLR business and the domestic business will be hived off in two separate companies. So I think that remains to be a key trigger for the stock. So I think hopefully in the second half of this financial year, you'll see a decent amount of up move in the stock. Hopefully, I think, the JLR business will be valued at a much significant valuation as compared to the combined entity now.
Right, well, let's leave it at that. Avinash Gorakshakar, always a pleasure having you with us on Newsline. Thank you so much for your time. And moving on from the markets now to what's happening geopolitically, globally. Prime Minister Narendra Modi has embarked on a 5-nation tour, a major diplomatic outreach which is aimed at deepening India's global partnerships across continents. Now, the tour, which begins today, goes on till the 9th of this month. Now, the tour begins with a 2-day visit to Ghana, marking Prime Minister Modi's first bilateral trip to the country and the first prime ministerial visit from India to Ghana in over 30 years. Now, during the visit, he will hold talks with Ghana's president to strengthen ties in sectors including economy, energy, defense and development, and will also address the parliament of the country. Now, the visit will also aim to boost India's engagement with the economic community of West African states and the African Union. Prime Minister Modi will then travel to Trinidad and Tobago from July 3rd to the July 4th at the invitation of Prime Minister Kamala Persaud Bissessar. Now, this will be Modi's first visit to the Caribbean nation as Prime Minister and the first PM-level bilateral trip since the year 1999. Now, he's expected to meet both the President and the Prime Minister and address a joint session of Parliament underscoring shared cultural and historical bonds. Now, in the third leg of Prime Minister Modi's trip, he will visit Argentina from July 4th to July 5th for bilateral talks with President Javier Milei. Now, the agenda includes expanding cooperation in defense, agriculture, mining, renewable energy, trade and people-to-people ties, further strengthening the strategic partnership between the two nations. And then from July 6th to 7th, the Prime Minister will be in Brazil to attend the 17th BRICS Summit, which will be followed by a state visit. Now, on the sidelines, Prime Minister Modi will also meet President Lula da Silva to expand bilateral cooperation in trade, defense, energy as well as technology. And the final stop on July 9th will be Namibia, marking Prime Minister Modi's first ever visit to the country following repopulation of the cheetahs into Kuno Tiger Reserve. He will hold talks with the country's president, pay tribute for Namibia's founding father and address the Namibian parliament as well. And moving on now, in a relief to bike taxi platforms like Rapido, Uber and Ola, the Centre's Motor Vehicle Aggregator Guidelines 2025 now permit the use of non-transport private motorcycles for passenger rides subject to state government approvals. Now, Clause 23 of the guidelines state that state governments may allow the aggregation of non-transport motorcycles for shared mobility. Further, it said this will help reduce tariff congestion and vehicular pollution while offering affordable transport options, supporting hyperlocal deliveries and creating new livelihood opportunities. The guidelines further empower state governments to authorize such services and levy fees on aggregators for providing permissions either on a daily, weekly or fortnightly basis. Aggregators must also ensure that all drivers onboarded under this clause comply with the regulations laid out in the guidelines. And from the roads to the skies, Indigo, India's largest airline by market share, has taken a major step in its global expansion by launching its first direct long-haul flight between Mumbai and Manchester. The thrice-weekly service will be operated using Boeing 787-9 Dreamliner aircraft under a damp lease agreement with North Atlantic Airways. Now, this marks Indigo's official entry into long-haul international operations and is part of its broader global push under the strategy towards new heights and across new frontiers. Now, the new route is set to boost connectivity for business travelers, students, tourists and the Indian diaspora while strengthening economic, educational and cultural ties between India and the United Kingdom. And coming up on the show, other headlines that we're tracking for you from around the world. The Republican-led U.S. Senate passes President Donald Trump's sweeping spending bill after a marathon session despite backlash over deep social cuts and ballooning national debt. Donald Trump says he will not extend the July 9th trade deadline, casting doubt on the chances of reaching a deal with Japan. The Donald Trump-Elon Musk feud escalates as the US president threatens to deport the world's richest man and pull federal funding over his criticism of US government spending bill. Trump says the US will replenish its strategic oil reserves when market conditions improve. Oil prices edge up as investors await OPEC Plus output decision. Donald Trump renews attacks on Fed Chair Jerome Powell, says yet again he has 2 or 3 candidates in mind to potentially replace Jerome Powell. New York's election board confirms Zohran Mamdani's surprise win in the Democratic mayoral primaries, setting up a showdown in the November polls. Eurozone inflation reaches 2%, easing fears of runaway prices and prompting a policy shift towards managing trade war-related economic volatility. Staying with Europe, Tesla sees stronger sales in the continent even as political controversy surrounding CEO Elon Musk and rising competition challenge its global market share. And prices for Chinese-made products sold on e-commerce platform Amazon are rising in the US faster than overall inflation, a sign that US tariffs are beginning to hit American shoppers. And also coming up on the show, an exclusive conversation with the German ambassador to India, Philip Ackermann, as well as Stefan Halusa, the Director General of Indo-German Chamber of Commerce, on why India is on the radar for most German companies looking at investments. That and more on the other side of the break. You're watching Morning Brief at 9.
Every brand tells a story. And they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
Back. You're watching Morning Brief at 9 and time now for a News 9 exclusive. The German-Indian Business Outlook, conducted jointly with KPMG in the month of April and May this year, has been released, and the annual survey reflects how India is top of mind for German businesses. Well, I have the pleasure of now being joined by Germany's ambassador to India, Philip Ackermann, and the Director General of the Indo-German Chamber of Commerce, Stefan Halusa, to put the findings of the report in perspective. Well, gentlemen, Ambassador Ackermann and Stefan Halusa, thank you so much for your time this morning. Let's get started. Ambassador Ackermann, my first question to you. The report suggests a staggering 79% of German companies, that's 4 in every 5 German companies surveyed, plan to invest in India by the year 2030. I want to understand what's driving the appeal towards India and which sectors in your mind are likely to see maximum investment action.
So first of all, I'm quite impressed with this number, and it's a trend, and Stefan will tell you about it a bit more. But we have seen through the years that there is a growing confidence when it comes to investing in India by German business. I think this year is an all-time high, and that shows that India, for many companies, German businesses, has become as we call it, a now market, not a future market. It's a now market. People really want to benefit from the development that we have in India. And when you ask me why is that such a clear and loud message, as it were, I would say clearly political stability, a very business-friendly environment, business-friendly authorities on center and state level. And of course, you should not forget a very impressively growing middle class. The impressive growth of India, the average 6 to 7% we see in India, is the fastest growing economy of that in this area in the world, and that of course reflects on German business. What I wanted to say when you ask me which sector will be the most interested one in investing, I think it's very difficult to say, because basically every sector is in a way interested in India. But what I see coming now is more and more what we call Mittelstand in Germany. So medium-sized enterprises. We have the big ships are in India for a long, long time. All the big names, the brand names of Germany, BASF and Bosch and SAP, and also the car makers are there. But now we feel that the Mittelstand, the smaller companies, the ones who are basically the backbone of German economy, they are more and more interested in India, and that's a good sign.
Right. So it's the Mittelstand companies. Stefan Halusa, let me bring you into this conversation, because there's another data point that suggests that more than half of the German companies surveyed, almost as much as 56%, aim to use India as a manufacturing hub. Now, I want to understand, is this decision based on the cost arbitrage that India offers, or India's growing technological prowess that delivers better quality? Or, in your mind, is it a combination of both?
I think it is a combination of various factors. When you look at the answer to the question, why are you investing in India? I think a few of those points stand out. One is, and the ambassador already mentioned that, is political stability. This is really something that is very important for investors, not only from Germany, but I think from anywhere in the world. Then it is more and more the availability of employees, of qualified English-speaking employees, and that, according to the survey, is getting more important than the cost arbitrage that you mentioned. So cost arbitrage is still mentioned, the relatively low labor cost, but it is decreasing in importance when it comes to the investment decisions of the companies. It's really more the other two. And of course, the other factors, obviously, is the booming economy that makes India so attractive as an investment destination.
Of course, we will talk about the economy as well. But Ambassador Ackerman, if I can bring you in now, and there's a lot of data in that report, and very interesting data. So it's important to refer to the salient features that you're seeing in the report. Now, 7 in 10 participants rank India among their top 5 most important markets. So again, my question to you is, what has India done right in terms of its consumption story to merit that preference of German brands?
So I would say that, first and foremost is, as you rightly say, the growing middle class makes a market for German products in India. I think, 10, 15 years ago, the market was relatively small in spite of the huge country, but now this market share is just getting bigger and bigger. Indians are sophisticated people. They know what quality is, and I think they have understood that, quality comes at a price also, and therefore I think that the consumers in India have a sense for the product the German business is offering, mostly produced by now in India, of course, through their branches in India. So I think that this market development makes it very attractive for German business to be in India. I will tell you that Stefan Halusa and I, we were yesterday in Bielefeld, which is a smaller German city in the west, and there is a big kitchen devices producer called Miele. And Miele is a very famous household name in Europe, but now their business in India is growing. So dishwashers, vacuum cleaners.
That's right.
And they say, they feel it that, the Indian customer is looking towards more quality in the product, and therefore they're, have been making.
All right. Well, of course, Miele is one of the brands that we have obviously heard of and interacted with here in India as well. But Stefan Halusa, another data point, and I'll not go beyond too many data points. Now, almost half the surveyed leaders in the report also believe that Indian companies will surpass their German counterparts within 5 years. Now, is this a result of Germany's, and not just Germany, the overall developed economy slowing down of growth rate, and India, on the contrary, which Ambassador Ackerman was also referring to, continue continuing to be the fastest growing major economy in the world, and that is likely to result in surging corporate earnings. So I want to understand which sectors in your mind are likely to surpass German companies quicker than the rest.
I think again it is a combination of different causes that make the companies answer like they did. One is, of course, when you look at what the companies are investing in India, it is digitization, it's artificial intelligence, it's cybersecurity, it is Internet of Things, it is Industry 4.0. So I think what companies are seeing, when the German companies are seeing when they look at India, that there's a big space in that digitization space where Indian companies are already taking up world market roles. And I think it is this that makes them believe that if this continues and that development will continue, we see the speed, the companies and some of those companies that are already active in there do have the potential to actually surpass German companies. And this is probably also based on the experience that German companies have made over the decades in other or with other countries. Look at Japan, look at Korea, look at China for that matter. At the beginning, the German industry was, I'm not saying looking down, but they were underestimating the potential of the respective companies. And I think right now they're very aware of this, and they're very aware that there is a huge and very profound technological base in this area in India. And there is the concern that if we're not partnering with India, if you're not investing in India, if you're not getting active in the market in India, if you do not cooperate with Indian companies in that area, we may actually fall behind. So I think this is one actually of the most interesting aspects and answers of the survey that because that triggers company to become active in India even more. It's not only the market size, not only the potential, it's the technology that is available and the understanding. If we're not getting active and benefit from the technologies and the talents that are available, this may not only we may not only miss out on opportunities in India, this may actually be a threat to our global business model. And this is why I think companies will start to look even more at India and what they should be doing there.
So what I'm hearing, Stefan, is the fear of missing out. It is FOMO also, which is one of the factors which is driving German companies to look at India more seriously. But Ambassador Ackerman, now I want to pivot away from this FOMO conversation that we were having and really talk about a real fear, and that is the fear of tariffs. And many are now saying that tariffs are ushering in a new world economic order. So how does the US-China decoupling story as well as Germany's own diversification outside of China make room for bilateral trade opportunities for countries like Germany and India to forge better business ties, sir?
So I would say that geopolitically, one would say that there is a certain urge or desire to decouple from China. Maybe decoupling is too much a word, but there is a de-risking exercise going on so that German business is thinking of diversifying and not putting all their eggs in one basket. So German business has made a lot of money and a lot of profit with China for a long, long time, but now they feel for various reasons that it is better to look elsewhere, and the government is also encouraging. So that's one part of the equation. The other part is tariffs, as you rightly say. And, as India, we are not very convinced by US politics on this matter, and therefore, our approach to international trade and business is basically lower tariffs and lower non-tariff barriers, and therefore, I think Germany is very keen on seeing this FTA, this free trade agreement between India and the EU happening, and I think that's the right answer to a more protectionistic environment. Trying to globalize your economy. I think India's private sector, there is no need to hide. It's top notch internationally, so it can go global. It does go global. It has gone global in many ways. So I think European and Indian businesses are, perfect for an FTA, and therefore I do hope, as an answer to this tariff policy we've seen in the last couple of months, we'll see an FTA by the end of this year.
Okay, Stefan, let's talk about that FTA now. Look at Trade Association. FTA. Now, there is a TEPA in place as a trade and economic partnership, which India has gone ahead and signed. But India-EU FTA, which many are now saying is likely to be agreed upon by the end of this year. So, are there stumbling blocks? Why hasn't this FTA gone through as yet? And in your mind and your conversations with industry leaders, what seem to be the stumbling blocks for the India-EU FTA to finally go through?
That's a difficult question to answer, Kartik, because only very little news actually transpires or transcends out of the negotiations. Therefore, we're not really sure where the negotiators are standing at this point in time. But I think in general, and that's also what I think makes us optimistic. In the past, we always heard that one of the major stumbling stones or issues was that while India and the Indian government prefers to have an early harvest agreement, basically an agreement that encompasses and includes and focuses on tariffs and maybe some of the non-tariff barriers, the EU has had the objective to have an all-encompassing, all-including agreement regarding sustainability and many other aspects as well. Now, and that, of course, is a different agreement. India wanted to have it in stages, whereas the EU wanted to have it in one stage. And from what we hear, but again, this is hearsay, I have to clearly state, is that in the last round, after the Prime Minister and the President of the Commission, Ursula von der Leyen, met, that there was, I wouldn't say call it breakthrough, but at least there seems to be some movement in the direction of having a staged agreement. And I think once this is really achieved, there can be a momentum that hopefully then gets us to the finalization of an agreement by the end of this year.
All right, and let's talk about momentum that we are also trying to build here. Ambassador Ackerman, a very pointed question to you, very dear to us here at the TV9 network. I want to understand the News9 Global Summit, which kicked off its international foray with Germany last year. And this year again, we are taking the flagship event back to Stuttgart in the month of October. How do events like these by media organizations providing the platform for dialogue help augment trade ties even further?
So I think I should congratulate you first for this very, very good initiative. And, you know, one of the most convincing elements of your conference is that you go to Stuttgart to do it. Germany is, like India, a federally organized state, and the states are very powerful, sometimes ruled by opposition parties, but very, very strong and performing. Baden-Württemberg, the state whose capital Stuttgart is one of the most performing states, and I think it's very smart to go to these Mittelstand environments like Stuttgart, where you find the local government, the state government, very interested in your conference, and also getting all the regional players, the big players, to the table. That is, you know, what makes German business so interesting, that you don't find it concentrated in one point. It is spread across the country, and Baden-Württemberg, the state in the southwest where Stuttgart is the capital, is one of the most interesting states for doing business. So I think it is not to be underestimated, the impact of your news conclave, your conference in Stuttgart, and I think it's a great idea to do it again this year.
Well, thank you so much. And with that, gentlemen, we will end it at the moment. But thank you so much. And I will also take the liberty of inviting you both to the upcoming News9 Global Summit in Stuttgart on October 9th and 10th. And before we end, the Republican-led U.S. Senate has passed President Donald Trump's sweeping tax and spending bill on Tuesday, advancing a massive $3.3 trillion package that locks in key parts of his agenda, the domestic agenda. The bill now moves to the House, where a tight Republican majority is expected to face a close final vote. Trump is urging lawmakers to get the bill to his desk by July 4th. And with that, it's a wrap right here on the Morning Brief at 9. Thank you so much for watching. News continues on the other side. You're watching News9.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the Nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the Nines, for the leaders of today and the visionaries of tomorrow.
Women in West Bengal should be assured that it is a safe place for them, because justice should be done, served cold, quickly, and it should be